So we have the mitigation block here, the dashed lines. You can see that being here. And it trades up to the consequent encroachment of that. So it's moving halfway point there and then trades lower, comes back up, mitigation again here. Midpoint, about almost got to it here. So we have another optimal trade entry there. Doesn't quite get to the beginning of the New York session. So this one here, just a little too early and runs lower, comes back up, bearish order block. So now we have another optimal trade entry here, sells off, fair value gap. This one's better. It's inside of the New York session. Comes back down, spikes up one more time into the fair value gap and optimal trade entry. Sells off, attacks the sell side liquidity here. And then one more pass down lower for offset distribution. Offset distribution. What are you giving me, ICT? When we look for targets, we love to cover shorts or take partials below old swing lows. Okay, just like this low here, you can take a partial here. That would be offset distribution. You're distributing your shorts below old lows to willing sellers. So you're buying back some of the position you're short. So to get out of a short, you have to buy some of it or buy all of it back. Well, here's sellers that want to buy it from you at a low price, and that's what we're doing. So we're taking the ideas of retail traders and we're completely turning it upside down and using it against them. And we're using their liquidity, and very thankful for it too. And the market trades in consolidation into the close at 2 o'clock. So we have two different things for a premium entry. Again, what's a premium? It's above equilibrium or above discount. All right, so if we look at the range between this low and this high, split that in the middle, you can see we're above midpoint with the mitigation and the consequent encroachment on the fair value gap. Consequent encroachment is the midpoint of a gap. Okay, so right there's perfect little entry in there. I think it probably went like one pipette above. I know I'm not perfect. And then sells off. We have another order block in here. That's this big beefy candle. Why not this one, ICT? It went higher because it has a little tiny little body. I want the big beefy body candle. And I cut through candles, so there again, we're not supply and demand. So we have an order block with the bearish fair value gap, and that fair value gap is here to here. So it fills in that, and then it runs to what? The sell side liquidity, which is offset distribution. Offset distribution is where if you're short, you're going to be buying from willing sellers at a lower price. Why is there sell side liquidity down here? Because people are seeing this and they're looking at harmonic patterns, they're looking at Fibonacci's, they're looking at supply and demand, whatever they're looking at, whatever retail logic they're using, and it starts to go up, they're chasing it, and they're going to put their stop loss right below here because that's what the books tell them. And if they're buying long, what kind of stop is it going to be? A sell stop, which is what makes this a sell side liquidity pool. It's pooling a bunch of liquidity that is predominantly selling in nature, because if the market participants that are riding this up are long, they want to protect their long position by selling out. They don't want to ride anything lower than this, so they're willing to sell at a lower price when it's up here. So the market efficiency paradigm that I teach you is I'm selling up here when they're trying to buy it, and I'm trying to buy it back when they want to get out of their long under here. And that's why it's offset distribution. I'm doing the worst possible thing to a retail trader in this instance. I'm their worst enemy. I'm their nightmare. And you're learning to be that too. And don't have any moral conflict about that, because they understood the risks when they open up their account. Period. We all have this understanding. You're going to lose money too, and you'll be a victim eventually. But I'm teaching you to be the predator, not the prey.